Buckle up, Buttercup, it's a wild ride. Hey there, everyone. Is it time to panic yet? Are the bears going to finally win? The crypto market is looking like a roller coaster designed by Elon Musk after a six-pack of Red Bull. No, I am not saying he created Bitcoin. It's like trying to ride a unicycle on a tightrope while juggling chainsaws. Exciting? Terrifying? A bit of both? Oh, absolutely. We've seen the stock market hit all-time highs recently, and so has Bitcoin, but where are we? What can we expect, and what should you be doing? We've seen meme stocks turn regular folks into overnight millionaires, and then back again because life is a cruel mistress. And through it all, Bitcoin just keeps chugging along like a digital honey badger that doesn't care about your feelings. But amidst all this financial chaos, there's a method to the madness. A glimmer of hope in the digital darkness. Wait, where was I going with this? Oh right, Bitcoin. Over the weekend craziness, it dipped below $60,000 again. So, should you panic? And what does it mean for the future of digital currency? Let's dive in. No, this is not a market cycle peak. No, this is not a time to panic. No, this is not the end of crypto. No, this is not the death of altcoins. This is a standard cryptocurrency correction. This is a 23% so far correction for Bitcoin, which is standard for the asset. During 2017, Bitcoin experienced many 40% corrections on its way to its cycle peak. This correction in the altcoin market is a huge opportunity to enter or add to positions, in my opinion, as the market is giving macro accumulation range low back tests. If you are new to crypto, understand that when Bitcoin corrects 20%, 40%, the altcoin market typically corrects 50%, 70%. This volatility is not a detriment, but a benefit. If you want the 100x gains, you must be willing to accept the high volatility and 50% drawdowns. Those with the unique ability to remain unemotional as their portfolio fluctuates in both directions always yield the highest returns. This is a highly fearful market environment. Do with that information as you wish. You buy when the market is in fear. Better said, you dollar cost average in at these moments. Bitcoin went on a massive two-quarter run, where the asset appreciated over 170%. After such a long and potent upside move, the asset is experiencing a natural and healthy correction. This correction will fuel higher prices once this corrective phase is finished. Contrary to popular belief, corrections are needed to sustain higher valuations. Always pay close attention to and never forget those who bear post during times of fear. A correction to 51K, 53K would completely reset sentiment and flush out many weaklings. At this time, I am slowly adding to altcoin positions as I believe many are trading near levels of maximum financial opportunity against their BTC pairs. Patience will be required. This is a medium to long-term play for me. Buying fear is always easier to talk and write about than it is to execute. I am currently executing. So, Bitcoin is back remaining above $50,000. That is what I am focusing on. As long as we stay above the $50K levels, we are simply in a range. Is that a big deal? In the words of every financial advisor, ever past performance is not indicative of future results, which is a fancy way of saying who the hell knows. But here's the thing about Bitcoin, it loves to mess with our heads. It goes up, it goes down, it goes sideways, it does the Macarena. It's enough to make you want to chuck your phone out the window and move to a yurt in the woods. But before you embrace your inner hermit, let's break this down. Psychological levels in trading are like celebrity gossip. They might not be based on anything substantial, but everyone talks about them anyway. And for Bitcoin, $50,000 is like the Met Gala of psychological levels. Why is $50,000 so special? Well, for starters, it's a nice round number, and we humans, simple creatures that we are, love us some round numbers. But more importantly, $50,000 represents a major psychological barrier. When Bitcoin is above this level, it feels bullish. It feels like the sky's the limit. Like you could quit your job, buy a private island, and rename yourself King Crypto. But when Bitcoin dips below $50,000, it's like someone let all the air out of the hype balloon. Suddenly, everyone's a crypto expert, predicting the imminent demise of digital currencies as we know it. So, what should you be doing? Don't panic. Dollar cost average in your favorite coins and try to not listen to too many influencers pushing the newest 100x coin. Keep calm and DCA on. So, what's a savvy investor to do amidst all this volatility? Panic? Sell all your assets and buy a bunker? Nah, just breathe. Remember the golden rule of investing, don't invest more than you can afford to lose. And this is where dollar cost averaging or DCA comes in. Think of DCA as the level-headed friend in your financial circle. While everyone else is freaking out, DCA is calmly sipping a latte, reminding you to stick to your plan. DCA is all about taking the emotion out of investing. Instead of trying to time the market, which, let's face it, is about as effective as trying to herd cats, you invest a fixed amount at regular intervals. Section 5, the future of money, or something like that. So, what does the future hold for Bitcoin? Is it the future of money? Will it replace the US dollar? Will it finally get invited to the cool kids table at the Global Economic Summit? Who knows? But one thing's for sure, Bitcoin is here to stay. It's volatile, it's confusing, it's probably powered by a bunch of hamsters on a giant wheel somewhere. But it's also exciting, it's innovative, and it just might change the world as we know it. Or maybe it'll just keep going up and down, like a digital yo-yo on steroids. Either way, it's gonna be one hell of a ride. Now if you'll excuse me, I'm off to buy a Bitcoin miner with all the money I made shorting meme stocks, just kidding. Or am I?